Broadcast.com, Mark Cuban's $5.7 billion streaming win. In 1995, while most people were still struggling to understand what the internet even was, two ambitious entrepreneurs in Dallas were about to stumble into one of the most perfectly timed business exits in tech history. Mark Cuban and Todd Wagner had no grand vision of revolutionizing media consumption or creating the streaming empire that would eventually dominate our lives. They simply wanted to listen to Indiana University basketball games online. This modest desire would birth Broadcast.com, a company that would pioneer audio streaming, burn through hundreds of millions of dollars, and ultimately become the poster child for .com excess when Yahoo purchased it for an astronomical $5.7 billion in 1999. The story of Broadcast.com isn't just about the rise and fall of an early streaming service. It's about perfect timing, market mania, and how two guys who just wanted to hear their college team play ended up walking away with billions while their revolutionary technology quietly disappeared into the digital graveyard. The origin story of Broadcast.com reads like a Silicon Valley fairy tale, except it happened in Dallas, and the protagonists were motivated by sports fandom rather than world-changing ambition. Mark Cuban, then a 37-year-old serial entrepreneur who had already made millions selling his previous company MicroSolutions to CompuServe, was living in Dallas and desperately missing his alma mater's basketball games. Indiana University's Hoosiers weren't exactly getting national television coverage in Texas, and Cuban found himself frustrated by his inability to follow his beloved team. His friend Todd Wagner, a fellow Indiana University alumnus and entertainment lawyer, shared this predicament. The two men began exploring whether emerging internet technology could solve their sports viewing problem. In September 1995, they launched AudioNet, initially operating from a single server in Wagner's bedroom. The company's first broadcast was an Indiana University football game against the University of Chicago, streamed to exactly 10 listeners. Within 6 months, they had moved to proper office space and were streaming everything from local Dallas radio stations to college sports, pioneering what would later be called webcasting, but was then simply an experimental curiosity for tech enthusiasts and homesick alumni. AudioNet's early growth trajectory defied all conventional business logic, expanding at breakneck speed in a market that technically didn't exist yet. By 1996, the company was streaming content from over 50 radio stations and had attracted attention from major media companies who were beginning to recognize the internet's potential for content distribution. Cuban and Wagner weren't content to simply stream existing radio. They began producing original programming, including coverage of Dallas Mavericks games, local news, and specialized shows targeting niche audiences. The company's bandwidth costs were astronomical, often consuming 80% of their revenue, but venture capital was flowing freely in the mid-1990s and investors were willing to fund growth over profitability. AudioNet raised $8.3 million in Series A funding in 1996, followed by another $30 million in 1997. By this time, they had rebranded as Broadcast.com and were streaming content to over 100,000 users daily. The company's staff had grown from 2 founders to over 300 employees, occupying multiple floors of office space in Dallas. Cuban, never one for modesty, began predicting that Broadcast.com would revolutionize how people consumed media, claiming that traditional television and radio would become obsolete within a decade. The technical challenges Broadcast.com faced in the late 1990s were staggering, requiring innovations that wouldn't become standard practice for another decade. Internet infrastructure in 1997 was barely capable of handling text-based websites, let alone streaming audio and video content to thousands of simultaneous users. The average home internet connection ran at 56 kilobits per second on a good day, meaning that streaming even low-quality audio required significant compression and often resulted in frequent interruptions and poor sound quality. Broadcast.com had to develop proprietary compression algorithms and content delivery systems, essentially building the foundation of modern streaming technology from scratch. They operated server farms in multiple cities to reduce latency and partnered with internet service providers to ensure adequate bandwidth. The company spent millions on Akamai's content delivery network, making them one of the early adopters of distributed streaming infrastructure. Video streaming was even more challenging, requiring connections and processing power that were simply unavailable to most consumers. Despite these limitations, Broadcast.com managed to stream the 1998 Victoria's Secret fashion show to over 1.5 million viewers, temporarily crashing their servers and demonstrating both the potential and the problems of internet video distribution. By 1998, Broadcast.com had become the poster child for .com success, boasting partnerships with major media companies and streaming content that ranged from baseball games to international news broadcasts. The company had secured deals with ESPN, ABC Radio, and numerous college sports programs, giving them exclusive online streaming rights to content that traditional broadcasters considered worthless add-ons to their main television and radio properties. Broadcast.com was streaming over 400 radio stations, 50 television stations, and producing dozens of original programs. Their user base had grown to over 2.3 million registered users who consumed more than 100 million minutes of content monthly. The company's revenue was approaching $20 million annually, generated primarily through advertising sales and subscription fees for premium content. However, operating costs remained enormous, with bandwidth expenses alone consuming nearly $40 million per year. The company was losing approximately $50 million annually, but in the euphoric atmosphere of the late 1990s internet boom, profitability was considered a quaint concern for mature businesses, not fast-growing technology companies that were supposedly reshaping entire industries. The initial public offering of Broadcast.com on July 17, 1998, perfectly encapsulated the irrational exuberance that defined the dot-com bubble at its peak. The company went public with an opening price of $18 per share, but within minutes of trading, the stock price had rocketed to over $74 per share before settling at $62.75 by market close, giving Broadcast.com a market capitalization of over $1 billion on its first day. This represented a one-day gain of nearly 250%, making it one of the most successful tech IPOs in history to that point. Cuban and Wagner each owned approximately 30% of the company, instantly making them paper billionaires. The IPO raised $50 million for Broadcast.com, but more importantly, it established the company as a legitimate player in the emerging internet economy and provided the public validation that would prove crucial for their eventual exit strategy. Financial media hailed the offering as proof that internet streaming represented the future of media consumption, though few analysts could adequately explain how companies like Broadcast.com would ever generate enough revenue to justify their astronomical valuations. Yahoo's acquisition of Broadcast.com for $5.7 billion in April 1999 represented the height of dot-com madness and one of the most perfectly timed business exits in corporate history. Yahoo, flush with cash from its own soaring stock price and desperate to position itself as a comprehensive internet portal, viewed Broadcast.com as the missing piece in its strategy to dominate online media consumption. The acquisition price represented nearly 300 times Broadcast.com's annual revenue and was paid entirely in Yahoo stock, which had increased by over 400% in the previous year. For Cuban and Wagner, the timing was impeccable. They had recognized that despite Broadcast.com's impressive user growth, the fundamental economics of streaming were unsustainable given existing internet infrastructure and consumer behavior. Bandwidth costs were decreasing, but not quickly enough to make streaming profitable, and most users still preferred traditional media consumption methods. The founders structured the deal to include immediate vesting of their Yahoo shares, allowing them to sell their positions before the inevitable market correction. Cuban famously began selling his Yahoo shares immediately after the acquisition closed, ultimately converting his paper wealth into over $2 billion in cash before Yahoo's stock price collapsed in 2000. Yahoo's stewardship of Broadcast.com proved to be a masterclass in how not to integrate an acquisition, revealing the fundamental disconnect between streaming technology and the business models that supposedly supported it. After paying nearly $6 billion for Broadcast.com, Yahoo struggled to understand what they had actually purchased or how to monetize it effectively. The streaming technology was impressive but expensive to operate, and the content partnerships were valuable but generated minimal revenue. Yahoo attempted to integrate Broadcast.com into their existing portal structure, renaming it Yahoo Broadcast Services and trying to leverage it to increase user engagement across their platform. However, this strategy ignored the specific infrastructure requirements and user expectations that made streaming successful. Yahoo's engineers, accustomed to serving static web pages, were unprepared for the complexities of real-time content delivery and frequently allowed service quality to deteriorate. By 2000, as the dot-com crash decimated technology stocks and forced companies to focus on actual profitability rather than theoretical market potential, Yahoo began questioning the wisdom of their expensive acquisition. The company started reducing investment in streaming infrastructure and cutting partnerships with content providers, beginning Broadcast.com's slow fade into irrelevance. The final years of Broadcast.com from 2000 to 2002 demonstrated how quickly revolutionary technology can become obsolete when business fundamentals finally matter more than growth metrics and market hype. As the dot-com bubble burst and technology companies faced intense pressure to demonstrate actual profits, Yahoo's patience with Broadcast.com's massive operating losses evaporated completely. The company began shutting down expensive streaming services and laying off the specialized technical staff who had built and maintained the platform. Many of Broadcast.com's exclusive content partnerships expired and weren't renewed, as traditional media companies decided that online streaming rights weren't worth the complexity of additional distribution arrangements. The rise of peer-to-peer file-sharing services like Napster had also changed consumer expectations about online content, making Broadcast.com's legal, advertiser-supported model seem quaint and unnecessarily complicated. By 2001, most of the original Broadcast.com technology had been discontinued or merged into Yahoo's general web infrastructure, effectively ending the company's existence as an independent streaming platform. The final shutdown came quietly in 2002, with Yahoo announcing that they were refocusing their media strategy and discontinuing most live streaming services to concentrate on their core search and portal business. The legacy of Broadcast.com extends far beyond its brief existence as a pioneering streaming service, representing both the potential and the perils of being too early to market with revolutionary technology. Cuban and Wagner had correctly identified that streaming media would eventually transform how people consumed entertainment, but they were operating nearly a decade before the infrastructure and consumer behavior necessary to support their vision would actually exist. Their technical innovations in content delivery and compression algorithms laid important groundwork for services like Netflix, Spotify, and YouTube. But the business model required to sustain those innovations wouldn't be viable until broadband internet became ubiquitous and mobile devices made streaming a convenient alternative to traditional media. The $5.7 billion acquisition price has become legendary in Silicon Valley as the perfect example of timing an exit, with Cuban using his windfall to purchase the Dallas Mavericks and become one of the most visible entrepreneurs in America. Wagner has remained active in media investments and has frequently noted that while Broadcast.com failed as a company, its fundamental premise was eventually proven correct by every major technology platform that followed. For Yahoo, the acquisition represents one of their most expensive mistakes during an era defined by poor strategic decisions and misallocated capital. The company never successfully integrated streaming into their business model and would spend the next decade watching competitors like Google and Facebook build the internet media empire that Yahoo had envisioned for itself. Today, as streaming services generate hundreds of billions in revenue and dominate global entertainment consumption, Broadcast.com serves as a reminder that in technology, being right isn't enough unless you can also survive long enough to be proven right.